Michelle, Mish, how are you?
I'm good. Good morning.
So let me first of all, I'm going to be the first one just because I got to meet with you last. Well, I didn't meet with you last time. Dale did, but I had you on the Trader Summit, and I asked, give me one big call, and your big call was get long silver, and that was like $23 maybe if my memory serves me correctly. I want to say it was right about here. And we were getting close to triangle resistance. I remember because I was like, I don't know. I'm going to wait for it to break out. And you were like, nope, silver is going to break out. And lo and behold, we got about a 20% move. It's obviously pulled back just a little bit, but great call. Great call.
Well, thank you. And I think I heard you say the word before I came on, stagflation.
Hmm.
Yeah, and it's a word we've been tossing around for a couple of years now. And of course, these are the kinds of words that are scary because it is the worst situation for the Fed to be in, but they've kind of been painting themselves into a corner. So it's not really surprising now that you're starting to see people say it in the mainstream. I've even seen Jamie Dimon say the word now. Not that he's any great authority since he seems to change his mind weekly, but nonetheless, yeah, it's kind of looking that way, which is one of the reasons why I like the metals at that particular time and still do, by the way.
Okay, so it's a great segue into in your opinion, I mean, this is, you think about stagflationary environment and, even though I've been in the markets now for almost 30 years, 25 plus years since I've been on trading desks. You've been around longer. Um, but the reason why I say that is because your experience speaks volumes here. How are you going to position yourself? Let's forget precious metals. I think everybody's on the same page as you. How
Exactly.
else would you position yourself for a stagflationary environment? How else do you think the market's going to respond?
Well, we're already seeing a little bit of a rotation into value from growth, and clearly Meta earnings was one result of that. Netflix last week, which was another one of my bold calls, I wrote a daily in March that said that Netflix was topping and was probably a great short. And the reason why is if you think about a stagflation environment, and even with these growth companies, they have to find some level of valuation. And also, in order to keep up and be competitive, this is exactly what Zuckerberg said, is they're going to have to spend some money. And so I think that AI obviously is, not going away, but it's kind of like EVs aren't going away. They're still the future, but yet we saw Tesla still trying to figure out what reality is for in terms of what that company is worth. And I think we're going to see the same thing with growth. So I wouldn't say I wouldn't be a buyer of growth, but I would not expect the type of returns that we've seen in 2023 into the early part of 2024 in that area. Where we could see more returns would be, I think, first of all, I'm looking at some emerging markets, especially emerging markets that produce commodities, because I still believe that we are a world that has been caught short enough raw material because producers with cheap prices have pulled back for years. COVID obviously was an extreme example, but still, even since COVID, with geopolitical situation, this is what we're seeing is that there's questions. Is there enough copper? Is there enough oil? And so on, forth and so on. Is there enough aluminum? I mean, even you've got some of these little base metals. And so I'd like some of those companies that are producers, some of those countries that are producers. And I have to say, I'm very commodity focused. And the good news is if you don't want to trade futures, you can actually look to trade ETFs, made it pretty simple. In terms of company stocks, I still like some of the defense stocks, particularly cybersecurity. And I do think that the consumer is changing. This is the last thing I'll say because I don't like to talk too long, and we can certainly do Q&A here with each other. But I've really been into this whole notion. I'm going to say I coined the phrase the vanity trade, and I haven't seen anybody else use it, but it'll happen where the consumer, and I know there's been some controversy today that came out about Ozempic and the pricing. This is exactly what I think is going to happen is that these diet drugs, they're going to have to become more competitive and more mainstream affordable. And when they do, I think that considering that we have a tremendous obesity problem, and we have had for many years, and it's only gotten worse since COVID. People that will turn to these drugs will become a new vain consumer of skincare and makeup and hair products and anything else that's going to make them feel good about themselves. So the spending goes from we, which we have seen as the initial thrust in the consumer after COVID, to me, taking care of me. So those
But
are
Estee Lauder never looked so good on you, right?
Estee Lauder, Elf obviously has been a hot one. I mean, even some of the other companies like Coty, but even the companies themselves like Novo Nordisk, AbbVie, which by the way specializes in fillers and Botox, which, I mean, I know this sounds silly to maybe to a male audience, although I know a lot of men who also do this. But if you think about it, if you can finally lose weight and keep it off, you're going to say, my skin is sagging. What can I do?
Yeah.
That kind of thing. So
That makes
that's
sense.
yeah, that's what I've been excited about. I think you have to time your way carefully. Obviously, you don't want to necessarily buy into a declining market, but we know that at some point they're going to look really interesting, and they're still holding up better than most of the other stocks.
So what happens though if Oprah, the spokesperson here, she grows like a second nose or something on her forehead? I mean, would that throw off the balance of some of these I'm just joking. I'm obviously being very sarcastic here. Um all right, so that makes a lot of sense. I love how you're putting it all together, Mish. We had one of our traders, Forex Gal. She asked, "Are you going to show any charts?" You're more than welcome to show some charts that you're looking at. But before you do that, I want to ask you this: if you want to, it's not mandatory. You can just point me in the direction if you want to as well. Um, I want to ask you about the commodities market, because what we've seen in commodities, going back to your earlier comments, talking about some of the producers, but if you look at the commodity indexes, like let's look at the here's the Reuters commodities, core commodities index. We're breaking out. It's a pretty significant breakout. The Bloomberg commodity index looks like it's trying to forge a bottom here. They look primed and ready to go. And
Mhm.
so going back to your macro thesis, prices are going to have to rise, and and for companies to stay competitive. Or does it go the other way around, and do we get companies cutting costs to stay competitive, to stay afloat? What are your thoughts there?
Well, I think we may see a little bit of both. And also, we have to factor in interest rates, right? Because that's a huge part of this whole equation. And with the higher for longer, which clearly seems to be the case, but that doesn't necessarily mean that the interest rates are priced right for the type of inflation that we could get if we are caught short raw materials. And then, of course, that would beg the question of which way the Fed goes, right? Do they want to protect the economy and potential recession? And not raise too much, or at the result of possibly seeing inflation get a little bit more out of control. But to get to your point, yeah, I think you have to look at companies that have pricing power. Obviously, growth companies. When I say growth companies, I don't necessarily mean growth stocks. But companies that are really basically have strong balance sheets and in their earnings show potential for growth. And that's exactly what we're seeing the opposite of so far with Meta and with Netflix. And of course, it'll be interesting to see what happens with Microsoft and Amazon. But
Sure.
really, I think you'll have both. I think you'll have companies that will be able to factor in the higher prices, and consumers, which is really where it all gets down to, will continue to buy those things, hence staples, hence value. And the companies that cannot keep up with pricing power, obviously, we'll have to cut courses like Tesla, classic example, in which case we'll start to see some issues with that type of company's stock.
Okay. All right. All right. Fair enough. Did you want to show any charts? Again, it's not
No,
required
no,
if
no.
you're,
I'd love to show one chart in particular. Well, actually, a
yep.
couple of charts because, I'm all about the macro, right? So let me just get to
You're
the
all
right.
about the macro, but you're also about the technicals. And that's what I love about you, Mish.
Well,
And
thank you.
you happen to be a New Mexicaner,
I
which
am
is
a New Mexicaner. Yeah.
very close to where I live. So I love that. Matter of fact, my son's soccer team is going to be in New Mexico this weekend, but we are going to have to skip it because it's prom weekend. But so
Oh,
yeah, I
oh,
know.
wow. So both your kids have stuff going on. Yeah.
Yeah.
All right, well, I wanted to show I've been featuring this chart in my dailies for the last really basically 3 weeks as we watching the progression. And obviously today's pricing is not in because the market hasn't opened yet, but kind of put it into your cap. These are weekly charts. This is by economic modern family. And for me, and for many others, happily, after all these years, the economic modern family has been a great story to tell about the market. And so we won't spend a lot of time on each, but I'll just say that what I had noticed is that we had these weekly sort of trading ranges throughout March and into the beginning of April. And those all in every single area, except for one, broke down. But interestingly enough, after they broke down, and that's I started to say caution in the market here in my dailies, looking at XRT, granny retail, of course, so important to GDP. But what happened was XRT fell right into the 200 week. So this makes it so clear. If we cannot hold this 200 week moving average, then clearly we have to find another level. Next support maybe would be down around 67 at the 50 week. We don't know, maybe a little bit lower. But I would think at that point we would start to think that, yeah, maybe we're at a better place to start buying as opposed to right here. I would only be a buyer right here, aggressive buyer of equities, is if this really holds up and starts to creep back up, say through 73 and then 75 back into the channel. So this is a choppy zone, and that's why people are getting chopped up. And
Yeah.
then in terms of the Russell 2000, the same kind of thing happened. It didn't fall quite as fast as the retail did, but small caps did fall. And again, held the 200-week moving average. So far, what we're having is an inside week, which is great. I mean, for me as a technician, that's like a dream because really all you have to do is be extremely patient and say, okay, we get through last week's high back into the channel, buy small caps. They look great. Opposite, of course, we break that 200 week. Here you can see the 50 week is closer, but getting down to around that 188 level, which is kind of where IWM broke out from, makes sense. And IBB, of course, has been the biotech has been the weak link all along. And none of these, by the way, cleared above the weekly channels, but you can see this broke down and broke the 50 and is also having an inside week. 125 for IBB seems like a good level, but we won't know that unless we get back through the 50 and really back through 130.
Can,
And
can I ask you a question? I want to just
oh,
right here, like because you're talking about obviously the IBB. At what point do you shift your focus and say, I don't need to be buying things anymore? Where's that level for you, and what would you be looking at where you're like, okay, I need to actually sideline myself on the buy side and be more focused on the short side of the market? Is there something that would trigger that type of idea for you?
well, it's already triggered for me in the growth stocks. This is what I was saying is I put out this bold report on March 15th that Netflix had topped out. And
Right.
yeah, so in terms of that area, you already had opportunities to go short. And I still see a lot of analysts who just, basically are one note. Yeah, AI is the future. You got to buy these dips. And as I said, the people who were buying dips in Tesla have gotten hurt. And the same thing could happen with Meta. We don't know. Obviously, the other companies haven't reported yet. It'll be interesting to see. I would say if I had a bet on one of them as a more stable, it might be Amazon. But then again, Amazon gets a lot of their cheap products from China, and that's a whole other story we won't get into. So what I'm really saying is I'm already not necessarily looking to buy equities at this point until it proves to me that it can hold. And if these levels can hold, yeah, we might have a better short-term type of short scenario, or at least, go more into cash, which isn't even that bad, really, if you think about it in terms of fixed income, because you're still getting about 5.5%. So, this is a whole new game because people are so used to buying the dip, assuming that the Fed is going to come into the rescue, 40 years of accommodative Fed policy, right? And those days are over. So I think this is a much more interesting, but also for people who aren't as experienced as you and I, maybe a more dangerous game as far as the classic buy the dip. And again,
Yeah.
we're talking equities. So I really love the opportunity. Rather than focus so much on where do I go short, I think you got to really look at a lot of the commodities. And I've been very vocal about it on Twitter. I said, buy wheat. Wheat has gone straight up. Watching natural gas, but not yet. Watching sugar, but not yet. But buy silver, buy copper, buy gold, buy miners. And I'm watching uranium, I'm watching lithium, I'm watching aluminum, I'm watching all these things. They haven't necessarily given me the signal, but that's where you got to find new tools in your toolbox if we're going into stagflation, and it may not necessarily be companies. This is
Yeah,
like,
well, Mish, when I got my Series 7 in 1995. And I know you were already, on trading floors and whatnot. That's when I started in the business, and we were very much at that point in time, it was a stock pickers market. And I know in today's world, it's very easy to have passive funds and just to be long the S&P and long, whatever, and not really taking much initiative to having choice in the matter on what you're buying or selling. And there's been a lot of debate surrounding that, that time is long gone. We are back and going to be in a world where you really have to be more selective in where you're putting your money. And that broadly would tell me that we are going to be more range bound in the years and decades ahead versus what you've seen during this boomer period in the markets over the course of the last, 20 some odd years. What do you have to say about that? And do you agree with that idea?
I do actually, and particularly again, I know I'm really beating up on the growth stocks here, but particularly the growth stocks, and I cannot say enough how dangerous it is. I coil when I hear these analysts who have looked like geniuses over the last several years, although in 2022 that of course was much tougher. But as we were ending 2022 into 2023 saying, these stocks are undervalued and they're a buy. Yeah, but now they're so overvalued. And the bigger question is exactly what you just said, which is we don't really know exactly what the value is. And they can be range bound, as we've seen in the past, for quite some time until things move into a new direction or a new type of economy. And everybody thought the new economy was AI, and it still is, but that doesn't necessarily mean that these stocks go up forever. And
Yeah.
so I agree with you. I mean, it still will always be a stock pickers market, and there's still always a bull market somewhere, as we know. But the major themes that we came into with AI and EVs, I think EVs have already shown that they're having issues really getting into mass adoption because of infrastructure, et cetera, et cetera, et cetera. But now I think we're going to see the same kind of issues with these companies that are AI generated. AI is here, no doubt. I use it, most people use it, but not everybody uses it. It's not like a staple. So I think you got to really be aware. And in terms of the rest of the market, I mean, if we just kind of quickly finish the chart here, I think it'll give you some ideas.
Sure.
Biotech could be something valuable. It could be. And that's why I like to look at the chart. But right now, it's just showing after tremendous weakness that it's catching its breath. Does that mean it'll get new air, getting ready to exhale? We don't know yet. Semiconductors, you can see, is much stronger down below that. I'll put my cursor here under the channel, inside weak, but it's not getting back through the channel. And if we cannot get through there, this only proves my point of what I'm saying. We could see companies like NVIDIA and other chips companies and AI related companies sell off more. And transportation, same thing, stronger, but still showing more of a decline. And then finally, though, on the opposite side, so we have two potential opportunities, right? We're saying small caps, maybe, if IWM can get through 200, maybe IBB if it can get back through 130, maybe Granny, although I would be less inclined to think. But regional banks, to me, have my biggest interest right now. I had mentioned that they never broke the bottom of the weekly channel. They've been in this 45 to 50 range for seems like forever. And they touched on the 50-week when we had that big sell-off last week. And now but they closed up on the week, and now they're getting follow through. And even today with the market down, they're still not down that much, which tells me that we could see a shift in the whole commercial real estate thing, which I don't know why. It doesn't make any sense to me. But from a technical standpoint, it could mean that we'll see an opportunity to be able to buy at least KRE, if not some of the regional banks. And then, the narratives of fundamentals always change after the technical setup. We know that,
Sure.
right? So that's kind of how I'm looking at things right now. And the other thing I wanted to show you guys, because, I'm huge into the junk bonds, is these junk bonds. And I'm sorry, I don't have my white chart set up here. But what's interesting about this is that this real motion indicator we have here, which I'm having a little trouble getting blown up. Essentially, you can see it's the dots, red dots are sitting right under the 200, yet this is above the 200. So we're getting a little bit of a bearish divergence. This is the 6-month calendar range low, which we broke, got to the 200-day, and now on yesterday, 2 days ago, we got above it, and then yesterday we started to sell off, and now look at our bid offer on the opening here. It's pretty far, 75.26 to 76.40, won't come in that low. But if this breaks down under this 200-week moving average with this declining momentum and this huge top, look at the range that we've had basically sideways since December, then I think you have to be careful pretty much everywhere, maybe even some commodities too, liquidity, but except probably gold, because everybody's going to continue to think that this means we're going into some major credit default. We've heard people talk about it. People say, it hasn't happened. When is it going to happen? It could still happen. So watch these junk bonds, because that'll give you your clue.
All right. Well, Mish, I'll tell you, I have a feeling that in the coming months, we're going to hear that nasty S word a little bit more that we talked about when we first came on. High prices, lower growth, slower growth, stagflation might be the term. And Tony said something which is really interesting. He said, "I hear the same advice every 10 years or so, and it's always burned me." Well, you know what that means, Tony, and Tony's a valued and daily listener here on the Face Show, is that maybe you need to find people like Mish to be listening to find those individual names versus maybe somebody that you've been listening to in the past. So Mish, tell us a little bit what you do at Market Gauge there in New Mexico.
Well, my official title used to be Director of Trading Education Research, but it was such a mouthful, we changed it to Chief Strategist.
There we
So,
go.
yeah, but I still write. I really am into education. And so I teach. I teach through obviously my dailies, through my media appearances, through interviews with you guys, which I've been doing for years, and I love you guys. And I'm sorry that Dale wasn't here today. Please say hi.
I will. He'll be
Um,
back.
yeah, I also co-manage our asset management company called MGAM. So we actually have all these blends that we have created, algorithmic models that really basically run the gamut from GEMS, which is global economic macro, to sector rotation, to large cap leaders, small cap leaders, et cetera. And then you get a blend, and you can either buy the subscriptions or you can give us the money and we'll run it for you depending on your appetite for risk. So I'm kind of all over the map. I try to trade. I do discretionary trading. We have a membership where people come and coach with me once a month and get some of our products. And I'm easy to find on Twitter, and I like to help people. And so if you ever have any questions at Market Minute, just find me and ask me, and I'll be happy to help you.
Well, Mish, I'll tell you, it's always nice and very much a pleasure to meet with you. And I know we met probably about a month and a half ago on Trader Summit. And I'll look forward to reaching out to you very soon. Appreciate your you always spending the time with us, and I know our traders really appreciate it as well. Get some really great comments in the chat. So, Mish, have a wonderful day in New Mexico. Wish I was there to see you this weekend. I won't be, but I'm sure your weather is going to be better than ours. So,
Well, let me know when you come the next time. Love to see
we'll
you.
do. Well,
Okay.
thank you, Mish. Have a great one. And thanks everybody for listening in here. Make sure you guys get involved with ForexAnalytix, and thanks for tuning in to Face. We'll see you tomorrow morning. Tomorrow morning, we are going to be covering the PCE live right here and the instant market reaction. So we'll see you there. Mish, stay well.
Thank you so much. Bye, and thank you, everybody.
Bye-bye. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.